So everyone is asking, what is the best investment now? I mean, is it Bitcoin and cryptocurrency? Is it real estate? Or is it precious metals? And those are really important questions to ask. And the reason why everybody's asking this question, or you should be asking this question today, is because the Fed is printing so much money. There's so much money going into the economy, and it's leading to things like inflation. So what you do in this moment, what you do in this time is incredibly important. And in this video, we're going to talk about a couple ways that you can position yourself to take advantage of one of the greatest transfers of wealth that we've ever seen. So stick around. Okay, so we're talking about this topic. I wanted to mention, we just did an event recently and it was called What's the Best Investment Now? We have three experts. We had David Morgan, Kathy Fedke, and Johnny Caldwell talking about basically comparing these three investments. It was an amazing conversation. We'll put the link in this video so you can see it down below. And then, why is it important to get out of cash? Robert Kiyosaki, who wrote the book Rich Dad, Poor Dad, he said, cash is trash. Now, why would anybody say that? Why would you not want to be in cash? Well, the problem obviously is the more money that's printed, it increases the money supply. There's still the same amount of goods, and each dollar, each amount of currency is actually worth less. So currency itself is not actually money, which a lot of people think that is the case. That is not true. So I'm gonna give you two tips at the end of this video. Inflation, we talked about, it's here, it's coming, it's here to stay. Shadow stats, we'll show you this here in a second, but basically you'll see on this chart that inflation is not 2 to 4%, it's actually closer to 12% when you're using the 1980 CPI metrics. So anyway, we're gonna get in and compare these three assets and show you which ones you should consider putting your resources into. Okay, so in talking about cryptocurrency and Bitcoin and different sort of cryptos, now you talk about a ride. Cryptocurrency has gone, multiple times higher. It's crashed by 90%. And there's just a lot of volatility with it. We're gonna get into that. But we're gonna talk about the pros and cons of somebody putting resources, investing, or speculating. And I use the word speculating, and we'll come back to that, of why I feel like it is speculating. But the pros are basically you have a limited supply, at least for something like Bitcoin. There's not an unlimited supply of Bitcoin. There's a very limited number. It's very finite. It's not necessarily inflationary, which is great. And you look at Dogecoin or other sort of cryptocurrencies, they're adding volume every single day, every week, every year, and so that's something to consider. Also, there is an inflation hedge component to this, that if you have a fixed number of cryptocurrency, of a particular cryptocurrency, and we're just printing dollars left and right, there is some inflation hedge because you're not invested in the dollar or in cash. The other thing is it's international. So you're basically having this product that can be transferred internationally, and basically it's more difficult for governments to regulate, which has a positive element, and there's also a negative element that could open it up to some sort of regulation in the future. So there's some pros there. Some cons are, what is a Bitcoin worth? Is it worth $0 or is it worth $1 billion? I don't know. It's very speculative, right? It's hard to say whatever cryptocurrency, Dogecoin, Bitcoin, Ethereum, what is it actually worth? And that's something that's something people consider. Now over here, it's not a real asset. And we love investing in real assets because we know that no matter how much money is printed, no matter how much technological products or currencies come out, it's something that you have. It's something that's actually real. Whether it's real estate, it's precious metals, other things like that. We love that it's real. Now the other thing here is, this is my own concern. I might get some flack for this, so if you have feedback on this, I'd actually love to hear it. But it is a complex financial asset. I got a book and I was trying to understand, how does Bitcoin actually work? And there was this book from the library, it was over 300 pages thick, and it was all this code speak on all the different things about how, programming, on how Bitcoin works. Now people have explained it to me. I understand conceptually how Bitcoin works, but it is a complex technological product. But just about every year, at least once a year, my credit card information somehow from a gas station or somebody gets into my trash, whatever, and my information gets stolen, and I basically find charges on my credit card that I didn't actually spend. So my concern with some of these technological products is there a backdoor there? We don't know who created Bitcoin. There was somebody named Satoshi who created it. We don't know who this person is. We don't know, are there backdoors? There's also the risk of somebody having hundreds of millions of dollars in one of these and losing it in a laptop. I have a personal friend who's lost literally millions of dollars, probably $4 or $5 million in current Bitcoin amount, because it was in a laptop. He bought it years ago for less than $1 a share, and now of course it's worth whatever it's worth. It's substantially more, but it can also be lost. So there's some risk there. So about Bitcoin, what do I think about Bitcoin and what do I think about cryptocurrency? I think it's very speculative. I honestly feel like it's like going to Vegas and putting it all in red. So if it's something that you can afford to lose and you want to do it, you can certainly do it. This has a lot of feel similar to the dot-com bubble in the late 90s, when your Uber driver starts giving you tips on what sort of cryptos you should invest in. That's a sign that you should be concerned. So we're gonna get into the next one, but that's what I feel about cryptocurrency. Okay, now we're gonna talk about precious metals, gold and silver primarily, okay? So this is a silver eagle. This is something that's real. I can hold it in my hand. That's one of the pros that I love about precious metals. It is actually something that's real. So if you get a crash in the stock market, if you have other sort of paper assets, this is something that actually is real. And that kind of basically brings us down to the next thing, is that it is truly an inflation hedge. And so, when people say, oh, the price fluctuates, so there's some volatility, a lot of times it's not that the value of this has changed, because when we look at this, it's important we don't look at precious metals like an investment. It actually can be considered money. And actually in the Constitution of the United States, it actually said that states or the government shall print or have no other money except for gold and silver. And for over 200 years, basically currency was just simply a claim check on these. I've got some other videos that talk about this, but just the fact that it's a real asset, it's harder to manipulate, and it's something to consider. So inflation hedge, the more money they print, the more the actual value of this stays the same, but the dollars actually become less valuable. So that's what happens in inflation. Real assets are still worth what they're worth. It just takes more dollars to purchase the same amount of real assets. Another thing is there's a 5,000-year history of it being money. If you look at biblical times, you look at ancient times, gold and silver are money. And so when you actually look at it, that dollars are not actually money, but this is actually what money is. This is a physical store of value. There's a very limited supply, and it has a history of being considered money. So over here, some cons, the storage of how do I store this? Where do I put it? There's some things you can do. There's private vaults. You can pay about 0.5% of the value per year to store physical gold and silver. Some people use home vaults. There's also safety deposit boxes, which are uninsured, but you can get insurance on those safety deposit boxes. So there's several options you can do to help store it. Another thing is people look at it, like I mentioned, that it could be volatile. The price goes up and down in dollar terms, but it's that not necessarily maybe that the value of this changes. It's just that maybe the amount of dollars or the fluctuation of the dollars it takes to purchase certain assets can change. I know that's a foreign concept for some people, or for some of you maybe, but basically people can look at it as being volatile. So tips, I found one tip that's got a couple of things here that you really should consider, is that the fact that buying physical gold and silver, I think is far better than buying ETFs. Now the reason why, you say, well, why wouldn't I buy ETFs? These are paper products. They're so much easier to get in and out of. You don't have to worry about the storage thing. It's true, but you have this thing called counterparty risk. Counterparty risk is basically when you have paper assets, you have a financial instrument, there is a issuer of this. So it's either a bank, it's some sort of institution that issues this. Now what happens if that bank, that institution starts having financial problems? Potentially the asset could be worth nothing. And then you see this with stocks. When a company goes bankrupt, that stock is effectively worth nothing, or little or nothing, or just sold off for the assets. So there's a counterparty risk that if you're buying an ETF that is full of the theoretical price or the spot price of gold and silver, you do have some counterparty risk there. So I'm not saying never do it, I'm saying be aware, and if you can, store up on this stuff, because it will give you that physical real asset that we're looking for. All right, so now we're gonna talk about real estate, right? And what we're primarily gonna talk about here is multifamily real estate, because there's some real advantages over other types of real estate. And so we're not gonna get into every, real estate itself is not an asset class. There are different asset classes within real estate. We're gonna talk primarily about multifamily real estate and investing passively or actively in multifamily. So First of all, some pros. So the taxes, there's some incredible tax advantages that allow you to reduce your taxes, defer your taxes, or completely write off your taxes. So particularly if you're a high earner, it's something that you really should consider. Also, if you're a real estate professional, such as a real estate agent, or maybe you're a flipper or something like that, it's incredible. You can really have some amazing benefits. That's something, if you want to touch base on that, that's why a lot of people get involved that are professionals, business owners, or they are just high earners. Another thing is you get higher returns typically than the stock market. It's not uncommon. We project typically in the 10 to 20% per year range for multifamily real estate. Obviously, every deal is different. You have to look and do your diligence on the particular deal, but we've seen some amazingly higher returns, sometimes 2 to 3x what the average of the stock market is, which is incredible. So take a look at that. Another thing is it truly is a hedge against inflation, right? You know, somebody said that, I think Mark Twain said, hey, invest in land because they're not making any more of it, right? So you have this real asset, you have something that's there, like I mentioned, that it actually is real, that if everything falls apart. And there actually is an advantage to in inflation, if you have debt and you've taken out a lot of debt, it's actually a way to kind of short the dollar, because over time you have these fixed long-term rates. And if inflation goes up, which we're expecting it to continue to go up, but you're basically have these really low rates, you have to pay back your debts in future dollars, which are actually worth less. So it's a really great strategy to really increase your wealth in times where inflation is expected. So really a great thing here. A few cons here. It is a liquid investment. What that means is it's not like a stock where you can just sell it and buy and sell it multiple times in the same day. It is more illiquid. So people typically, when they invest passively into multifamily syndication, it is a longer term thing. It's not something that you just get in and out of. So typical hold period is typically 3 to 7 years. There are some that are shorter, some that are longer, but it is more of a liquid type of investment. And then also you don't have the day-to-day control. Now this was hard for me because I started doing single family houses, and I realized that if I invest in a deal, I basically vet the deal and I vet the project, and then I don't have the day-to-day control, which there's a double-edged sword to that, right? Like you're not the one that's getting called if there's issues with the property. You're not the one, even if you have a property manager that look into to, hey, how do we solve this, whatever. So this is a team of people in multifamily syndication that helps solve this for you. So it's something that really is, again, it could be a negative if you love to be hands-on in everything, but it is something that is a real positive when it comes to being able to not have to do everything yourself, which a lot of busy professionals really undervalue their time. So if you're a high earner, something maybe having less control could actually be a good thing for you. So a couple closing thoughts here, just want to leave you with when it comes to this investment here is that a lot of people just haven't tried it. Again, until we've tried something, it makes it feel like, oh, it's just this foreign other concept. A lot of financial assets and things that are out there, Wall Street just dominates because they spend billions of dollars to educate you on what a traditional investment is. But what is truly more traditional than having a real asset such as real estate? So that's something to consider. The other thing is it's truly scalable. So here's a question to ask yourself. If you are a real estate person and the thought of getting another house, another duplex, another small multifamily seems overwhelming, then multifamily could be a good option for you. So I just want to take a minute and just kind of wrap all this up here and kind of go through what we talked about. Basically Bitcoin and cryptocurrencies, there's a lot of speculation there, a lot higher degree of risk. Some people love it. To me, it feels like going to Vegas. These two with real estate and precious metals, there is a sense of a real asset that's there. I love multifamily real estate because it produces income. The government's shown they're going to support people to stay in housing, which typically, especially if things get bad, where are they going to go? If people can't afford single family housing, they go to multifamily housing. So anyway, I'd love to hear your thoughts on this. I'd love to see what it is you're doing to protect yourself from an inflationary environment. So stick your comments down below. Also, we're constantly doing deals. We're multifamily investors and syndicators. So if you go to bronsonequity.com/join, you can join our upcoming deals. Also, we've got this great report that's called The Single Best Investing Strategy During and After a Pandemic. Check it out. I think you're going to love it. You'll also find that at bronsonequity.com. We'll look forward to seeing you at the next video. Please subscribe and like this video so that we can continue to bring you great content and help other people find this great material. We'll see you soon. And here is our quote for this video. It is, "Real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care, it is about the safest investment in the world. Franklin D. Roosevelt, U.S. President.